Hello, investors, traders, and market enthusiasts. It is Tolga, and you are watching our first weekly outlook. And let's dive into what you need to know to stay ahead in this dynamic financial environment. Last week, we witnessed significant milestones in the markets. Major US stock indexes experienced their strongest week in 12 months, with gains ranging from 5% to 6%. The S&P 500 set record and Nasdaq set record highs, while the Dow Jones crossed 44,000 points, albeit briefly. A major catalyst was Tuesday's election results, sparking a rally that saw the Dow jump 3.6%, the Nasdaq rise 3%, and the S&P 500 up 2.5%. Bond yields mirrored this optimism, with the 10-year US Treasury yield closing at 4.43%, up from 4.29% just a day earlier. Midweek, the Federal Reserve quarter-point rate cut, following September's half-point reduction, matched market expectations, although bond yields took investors on a roller coaster, closing the week slightly lower. Equity markets were unfazed by volatility. Investor sentiment surge reflected by the sharp decline in the CBOE volatility index, which dropped 31%, the lowest in over 3 months. Additionally, US consumer sentiment reached a 7-month high, exceeding expectations. Meanwhile, Bitcoin took center stage, skyrocketing to an unprecedented $77,000, bolstered by broad market confidence. By the way, it is traded around $80,000 right now. Inflation data also remained in focus as investors anticipated a pivotal CPI report this coming Wednesday, following September's mixed signals of 2.4% annual inflation and a slightly higher core rate of 3.3%. Turning to the week ahead, we have several key data releases and economic indicators. Monday, Veterans Day, expect US stock markets to remain open while bond markets take a holiday pause. Tuesday, Australia's NAB business confidence and the UK's unemployment data headline the day. Wednesday, all eyes on the US as the Bureau of Labor Statistics releases the Consumer Price Index. The day will also bring the federal budget report. Thursday, look for the US PPI data and weekly jobless claims, which could signal the health of the labor market. Friday, a packed session with US retail sales, business inventories, and industrial production figures. In Europe, the UK's Q3 GDP data will shed light on economic momentum amid evolving trade conditions, while Germany's ZEW Economic Sentiment Index could indicate optimism levels. Over in Asia, Chinese data-heavy releases, including industrial production and retail sales, will reveal the impact of recent fiscal stimulus and debt restricting policies. Watch Japan's Q3 GDP figures for growth signals amid slowing global demand. Finally, let's revisit the latest from the Federal Reserve. With last week's rate cut, the Fed reiterated its commitment to monitoring economic developments to maintain inflation at 2% and support employment. This policy stance sets the stage for its December meeting, where further clarity on the interest rate direction may unfold. To sum up, next week's spotlight will be on US inflation data, retail sales figures, and updates from the Federal Reserve. In Europe, keep watch for economic sentiment and GDP releases, while Chinese data set will be essential for gauging its economic trajectory. That wraps up this week's market overview. Stay tuned for daily updates and real-time analysis right here on my channel. Thanks for joining us, and as always, stay informed and stay ahead.